Gareth McCartney is Global Co-Head of Equity Capital Markets at UBS. And again, I really appreciate you being here.
Sure, nice to meet you.
Could I put it that way? I mean, do you feel that strongly about the opportunities for European stocks still?
Look, I think over the last few years, we've had a compounding US exceptionalism play. Market's been strong, dollar's been strong, so investors really haven't had any reason to look elsewhere. We've had an ongoing value case in Europe, which has been compelling, but lacked a catalyst. Interestingly, today, that could be an interesting catalyst for global investors to look at least at their underweight in Europe and see a multi-year play.
You know, if you had said this 6 months ago, I would have rolled my eyes and said, you know, look at what's happened over the past few. So the market loves to make the most number of people look stupid as it can at any one time. And so this was very under-owned, to your point, some of the emerging markets as well. What do investors do now? I mean, we've already missed a 20-30% run from the bottoms, but how much longer could this keep going?
Well, look, I think when you go back to fundamentals and first principles, there is a genuine value case that gives you a lot of upside, both in terms of duration and also in terms of absolute price movements. For investors, there's some themes globally. So the AI theme has been significant, and I think the general US growth has been a clear play. Today potentially brings, I think, infrastructure plays across Europe and also the defense theme, which has been ongoing, probably more legs as well. But I think it's a more broad-based rotation out of tech and growth into the broader market. Investors have been looking to do that at some point, and I think this will catalyze people at least looking at those opportunities. There'll be a tactical adjustment today, which is more trading-orientated, covering shorts. Then we'll have a period of reflection and then a more strategic re-asset allocation. I think we'll need further news to support this.
Still, and this kind of gets into your line of work, but Mario Draghi talked a lot about this. You know, where are the startups? Where is it's in Germany in particular? They've kind of missed the tech revolution there. So where is the new capital formation coming from and the ecosystem that's going to support maybe that next 10 or 20 year period of, you know, of good stock market performance?
So we did some analysis on the venture capital community, and if you look at the bigger VC funds, we found 30 to 40 companies across Europe which already have a valuation potential of $1 billion and upwards. So we see in the private space there are a lot of opportunities there, and they spread many different sectors, including technology. So I think there's definitely the companies there. I think what we need to see next is, will there be a transition mechanism that forces those companies, or actually a stronger equity market that supports them transitioning from private funding into the more traditional IPO route and therefore public companies?
Meanwhile, here in the U.S., we have a healthy startup ecosystem and all of that, but we don't have a lot of IPOs. I think CoreWeave filed this week, and that's headquartered here in New Jersey. But what do you make of that? When should we expect to see more listings? When should we expect to see bigger deals happening?
I go back to your point on consensus. The consensus was we've literally had a 3-year period where we've been way below trend in terms of volumes after the peak we saw in 2021. So the market is ready. So public investors have capital and are looking to deploy it. 2024 was the definitive reopening globally of the IPO market. We have big deals in each of the regions, APAC, here in the US and in Europe. But what we haven't seen is a return to normalized volume and an ongoing functioning market. We're still running at 15 to 20% below those volumes. Consensus expectation was this was the year. You know, we had US election out the way. We've seen US rates peak. They were 2 key criteria. And then as a capital markets person, you look at vol at lows, equity markets at highs, and we've got a strong pipeline.
Right, and you're like, these are the perfect conditions.
This
Where are
25 is the year, and then here we are sitting already coming towards, you know, middle to end of Q1. We haven't seen the issuance we expected because of the geopolitical volatility that we've seen.
Interesting.
At the risk of being the boy who cried wolf, our expectation is, and you're seeing signs of this happening, but we would see that around the Easter timeframe, so April, everything else equal, would be the time that we start to see these companies come. We're not going back to 21 volumes, but I think we should see a normalized functioning IPO market where there's value on offer for investors to attract them, but equally private equity groups and entrepreneurs see the public markets as open and functioning, and therefore they have the confidence to proceed with that.